So I want to quickly compare and contrast traditional 401k versus Roth 401k. Which one is better for you? Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you're to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to do a quick comparative analysis between a traditional 401k and a Roth 401k. So if you've heard of a Roth 401k, you may be wondering how different it really is from a traditional 401k. We get it. 401ks can be confusing, all right? So while these two types of 401k accounts have some similarities, they also have some pretty huge differences. If you want to make the most of your retirement savings, you need to really understand those differences and how they affect you. So we're going to break it down in today's show, topic by topic, because at the end of the day, we're talking about your future here, right? So it's very important to understand the nuances of those two retirement accounts. So access to a Roth 401k is becoming more and more common. So you are in the majority if you have this option at work. And according to McKinsey and the U.S. Department of Labor, over half of companies who offer some type of retirement savings plans offer a Roth 401k plan. The bigger the company, the more likely it is to allow you to contribute to a Roth 401k. And guess what? Savers are taking advantage of this new option. No surprise here, right? Among workers who know about the Roth 401k and use it in their retirement planning are mostly the millennials and folks in their 40s also. And if you can contribute to a Roth 401k and a traditional 401k at work, which one should you really use? Let's first explain things here. What is a Roth 401k? The Roth 401k is a type of retirement savings plans that allows you to make contributions after taxes have been taken out. That's the key word here, after taxes have been taken out. Then you receive tax-free withdrawals when you retire. The Roth 401k was introduced in 2006 and was designed to combine features from the traditional 401k and the Roth IRA. So with the Roth 401k, you can take advantage of the company match on your contributions if your employer offers one, just like a traditional 401k. And the Roth component of a Roth 401k gives you the benefit of tax-free withdrawals. So what are the similarities here? Let's start with what a traditional 401k and a Roth 401k have in common. First, these are both workplace retirement savings options. So with either type of 401k plan, you can enjoy the convenience of having the contribution drafted out of your paycheck. Fantastic, right? So that's the first benefit here. Second, both a traditional 401k and a Roth 401k have the ability to include a company match. So nearly 80% of companies who offer a 401k or similar products offer a match on employee contributions. So if you work at a place that offers a match, please take it. Take it. Take it. Your employer is actually giving you free money, free moolah, folks. So the third thing you need to keep in mind in terms of similarities is that both types have the same contribution limits. All right. So the contribution limits changes all the time and it's basically the same. So it hovers around 19 or 20,000. And if you are over 50 years old, if you're 50 years or older, there is a catch-up contribution, so it goes to 25 or 26,000. So the opportunity to invest that much every year is a huge perk of traditional and Roth 401ks, especially when compared to the Roth IRA's contribution limits of $5,500 per year. Think about that. Very important. And the Roth 401k includes some of the best features of a 401k. So you have convenient contribution methods and the possibility of a company match if your employer offers one. But that's where their similarities end. Now let's talk about the differences. So the biggest difference between a traditional 401k and a Roth 401k is how the money you contribute is taxed. So taxes can be kind of confusing, not to mention a pain to pay, right? But let's start with a simple definition and then we'll dive into the details here. So a Roth 401k is a post-tax retirement savings account. That means that your contributions have already been taxed before they enter your Roth 401k account. On the other hand, a traditional 401k is pre-tax savings account. So when you invest in a traditional 401k, your contributions go in before they're taxed, which makes your taxable income lower. Okay, this is something you need to pay attention to. So I'm showing you right now here. You can see here on the screen here, we have contributions. So I'm showing you a comparative table, traditional 401k versus Roth 401k, the pros and cons. So the traditional 401k, Roth 401k, so the contributions are made before tax for a traditional 401k, and they are made after tax for a Roth 401k. Withdrawals are taxed in a traditional 401k. They are not taxed in a Roth 401k. And access distribution at age 59.5 for a traditional 401k. And after account has been held for 5 years, the distribution is allowed due to disability, death, or age 59.5 for Roth 401ks. I want to speak to you now about contributions. Very important. How do those definitions play out when it comes to your retirement savings? Let's start with your contributions. With the Roth 401k, your money goes in after tax. That means you're paying taxes now and taking home a little less in your paycheck, right? We got that. When you contribute to a traditional 401k, your contributions are pre-tax. They're taken off the top of your gross earnings before your paycheck is taxed. You may be wondering, why would anyone contribute to a Roth 401k if it means paying taxes now? If you only look at the contributions, that's a fair question. But hang on. The huge benefit here is that a Roth 401k does a great thing, does magic when you start withdrawing money in retirement. Now let's talk about withdrawals in retirement. So the biggest benefits of the Roth 401k is that because you already pay taxes on your contributions, the withdrawals you make in retirement are, guess what? Tax-free. So any employer match in your Roth 401k will still be taxable though. This will be taxable during retirement, but the money you put in and its growth is all yours. So no taxes will be taken out when you use that money in retirement. This is very important. And I want to explain to you that basically the money you put in other words, that's the withdrawals, they're not taxed. The employer match is taxed, and the earnings and growth, the withdrawals is not taxed. The earnings that you derive from your own money is not taxed. Okay, so that's important for a Roth IRA. In contrast, if you have a traditional 401k, you'll have to pay taxes on the amount you withdraw based on your current tax rate at retirement. Here is what that means. Let's say you have $1 million in your nest egg when you retire. That's a pretty nice stash, right? If you've got it and invested it in a Roth 401k, that $1 million is all yours. If $1 million is in a traditional 401k, you'll pay taxes on your withdrawals in retirement. And if you are, let's say you are in the 25% tax bracket, that would mean $250,000 on that $1 million. That's going to taxes. And that's a hard pill to swallow, especially after you've worked so hard to build your nest egg. Okay, this is something you have to think about. And one thing I also want to see here is that it goes without saying that your nest egg will last longer if you're not paying taxes on your withdrawals. And that's a great feature of the Roth 401k and the Roth IRA for that matter. All right. Another slight difference between a Roth 401k and a traditional 401k is that you have something called, you have some rules around access to the money. In a traditional 401k, you can start receiving distributions at age 59.5. With a Roth 401k, you can actually start withdrawing money without penalty at the same age, but you also must have held the account for 5 years. So if you're still decades away from retirement, you don't have anything to worry about. But if you are approaching the 59.5-year mark and thinking about starting a Roth 401k, it's important to be aware that you will not have access to the money for 5 years. Very important to remember. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a convo about the traditional 401ks versus Roth 401ks, which is better for you. Now, why do experts sometimes recommend the Roth 401k? And the explanation is very clear, very simple also. If you are investing consistently every month, whether it is in a Roth 401k, a traditional 401k, or even a Roth IRA, you are already on the right track. Fantastic. Keep doing what you're doing right now. Just keep doing it. The most critical part of wealth building is consistency, right? Consistent savings every month, discipline, persistent, no matter what the market is doing. But if choosing between a traditional 401k and a Roth 401k is something that puzzles you, let's think about it. You have to think about a few things, actually two things. Here are the biggest reasons the Roth 401k comes out on top in terms of retirement planning. You have the tax benefits. So it may be tempting to delay paying taxes so you can get slightly more in your paycheck now. But think about it this way. You are already doing the hard work of saving for retirement. If you can get that money to go even further, wouldn't you want to take advantage of that opportunity? And here is another thing to consider. No one can know how the tax brackets or tax percentages will change in the future, especially if you are still decades away from retirement. So do you want to take that risk, that uncertainty? No, right? And you also have, so besides the tax benefits, you have the emotional toll. Let me explain. Like it or not, it's very hard to separate emotions from investing. So imagine getting to your retirement years and watching your $1 million nest egg reduced to less than, say, $800 or $750 because of taxes. You would much rather pay taxes now than see all that money fly out the door later, right? You will miss maybe $100,000 or $200,000 out of your paycheck now, but it's better to swallow that pill right now. And if you can actually get into the debt of contributing 50% of every paycheck to your Roth 401k plan early on, you will not even miss the money you're paying in taxes. And when you get the retirement stage, when you get into this retirement stage, you'll be glad you don't owe the government part of your hard-earned money anyway. And who is eligible for a Roth 401k plan? So if your employer offers it, it means you're eligible. Plain and simple. Plain and simple. Unlike a Roth IRA, a Roth 401k has no income limits. That's a fantastic feature of the Roth 401k. So no matter how much money you earn, you can contribute to a Roth 401k. And if you don't have access to a Roth 401k at work, you can still take advantage of the Roth benefits by working with your investing pro to open a Roth IRA. Just keep in mind that income limits do apply when you contribute to a Roth IRA. And so what are the contribution limits here for the Roth 401k? For 2021, again, those limits change every year, but for 2021, the 401k contribution limit is $19,500. This contribution limit applies to any 401k contribution, whether they are in a Roth 401k or a traditional 401k. And this means what? It means that if you are contributing to both, the combined total of your contributions cannot exceed the $19,500. And if you are 50 or above, the contribution limit increases to $26,000. In other words, you have to add the $6,500 catch-up contribution. And how much should you really invest in your Roth 401k? It really depends. And most experts recommend investing 15% of your income into retirement savings. So if you have a Roth 401k at work with good, let's say, mutual fund options, you can invest your entire 15% there. Let's say you make $60,000 a year, right? That means you would invest $750 a month into your Roth 401k. See, investing for the future is easier than you thought. And the kind of mutual funds you choose for your Roth 401k depends on your risk profile, but always make sure that you are diversifying. You want to diversify your portfolio so that you can maintain a healthy amount of risk in your retirement savings. It's important to balance your investment among several types of mutual funds. You can have growth and income, growth, aggressive growth, and international funds. That way you are just not actually putting all your eggs in the same basket. You don't want to do that. And you can also actually, the question people want to know if they should roll over their traditional 401k to a Roth 401k. Now, it really depends upon your situation. There's not a one size fits all answer when it comes to rolling over your retirement savings to a Roth account. If it makes sense for your situation, it's a great way to take advantage of tax-free growth on your accounts. But keep in mind that rolling over a traditional 401k means paying taxes on it now. All right. So if rolling over, let's say if you're rolling over, say 100,000 and you are in the 25% tax bracket, that means you have to come up with $25,000 in cash to cover the taxes. Right. Do not pull that money out of the investment itself. So those are the kind of calculations you have to think about. And one thing I also want to say here is that you can actually reach out to an investing professional if you want to learn more about your Roth 401k or other investing options. Reach out to a professional. A financial advisor can help you understand your investments and make confident decisions. Okay, unless you're good in when it comes to financial planning, don't try the DIY route. A DIY approach to investing is never a good idea. Even the pros work with the financial advisors. So your family's future is way too important to wing it. And one thing I also want to talk about, so which is best for you? The traditional 401k versus Roth 401k. This decision mainly comes down to how you want to put money into the account and how you want to take the money out. Let's start with today, putting money in. If you would prefer to pay taxes now and get them out of the way, or you think your tax rate will be higher in retirement than it is now, you want to choose a Roth 401k. Because by paying taxes now, you are actually shielding yourself from a potential increase in tax rates by the time retirement rolls around. By paying taxes on the money now, you are shielding yourself from a potential increase in tax rate by the time retirement rolls around, because you never know, like Congress may change the tax rates, tax brackets. Nobody knows what will happen 25 years from now, or 20 years from now, or 10 years from now. And you are also giving yourself access to a more valuable pot of money in retirement. Okay? And in exchange, each Roth 401k contribution will reduce your paycheck by more than a traditional 401k contribution, since it's made after taxes instead of before. Okay? If your primary goal is to reduce taxable income now, or to put off taxes until retirement because you think your tax rate will go down, you will do that with a traditional 401k. Just know that you are kicking those taxes down the road to a time when your income and tax rate are both relatively unknown and might be higher if you advance in your career and start earning more contribution. And if you cannot or will not invest in that tax savings, the Roth 401k is actually a great choice. And if you cannot or will not invest that tax savings, and it could be a considerable amount for those in high tax brackets making maximum contribution, the Roth 401k is still a great choice. So the question is it only about taxes? Not always. Not always. The taxes are important, and they are the primary factor in this debate. But there are other points to consider, and it really depends upon your situation. Let's just quickly explain things here. First, you need to understand whether you are eligible for a Roth IRA, because Roth IRAs have income limits. So Roth 401ks do not. So that's the major difference here. If you earn too much to be eligible for the Roth IRA, the Roth 401k is a chance to get access to the Roth's tax-free investment growth, right? You just want to get that out of the way. You also have certain income thresholds in retirement. So taking some of your retirement income from a Roth can lower your gross income in the eyes of the IRS, which may in turn lower your retirement expenses. So a lower income in retirement may reduce the taxes you pay on your Social Security benefits and the cost of your Medicare premiums that are tied to income. You also have to think about accessing your retirement money. So unfortunately, the Roth 401k does not have the flexibility of a Roth IRA. In other words, you cannot remove contributions at any time. In fact, in some ways, it's less flexible than a traditional 401k, owing to the fact that you have this 5-year rule. So even if you hit age 59 and a half, your distribution will not be qualified unless you've also held the account for at least 5 years. So this is something that you need to keep in mind when you are getting a late start. And you also have to think about the fact that there is something called RMDs, required minimum distributions in retirement. So both accounts require account owners to begin taking distributions at age 70 and a half. But money in a Roth 401k can easily be rolled into a Roth IRA, which will then allow you to avoid those distributions and even pass that money onto your heirs. Okay, so finally, I want you to also remember that you can split the difference and contribute to both accounts actually, and you can switch back and forth throughout your career and even during the year, assuming your plan allows it. So using both accounts will diversify your tax situation in retirement, which is always a good thing. Now, if you have more questions or you need more information about this, I suggest you speak to a plan administrator at work, or you speak to somebody in the HR department so you can clarify the options you have in terms of traditional 401k and Roth 401k at work. All right, folks, this is it for today's conversation. I was doing a quick compare and contrast between a 401k, traditional 401k and Roth 401k, and I gave you an overview of the conversation. What is a Roth 401k? What are the similarities? What are the differences? Why experts may recommend the Roth 401k? Who is eligible for a Roth 401k? What are Roth 401k contribution limits? How much should you invest in a Roth 401k? Which is best for you? And the big question is it only about taxes? Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.